And of course, Dr. Ola Brown, who is still with us in the studio, founder of HealthCap and author of Journey to Series A. She brings a unique perspective at the intersection of VC and social infrastructure with investments spanning nearly 30 startups across fintech and health tech. Ola, what about you? What was your big takeaway for 2024?
So 2024, I think, was interesting because I think it was an evolution in the venture capital landscape in general. So I raised my first fund in 2016. So returned...
Almost a decade ago.
Yeah, returned 5 times money to investors by 2020. And that was one of the best returns on the continent. So I think that the venture capital ecosystem started really evolving in terms of manager selection. So looking at managers with track record who have returned money to investors and differentiating that from sort of the poorer returning managers. So that was the first thing. The second thing I think was around different specialization. So the first era of firms were all very generalist firms that invested in all different sectors. But we at HealthCap decided for our second fund just to focus on fintech and health tech. I think that this has been something very, very common in America. So American firms are highly differentiated to the extent that even within health tech, they have like, you can have like $1 billion biotech firm, which is a small segment of health tech. So sector selection and manager selection became really, really important. Whereas I feel like in the era of free money, 2020, 2021, we spoke about when there were 0 interest rates and people could not invest in fixed income. Sometimes there were negative interest rates. So of course, people could not do fixed income. So venture was just like, let's just give money to any other asset class so that I'm not effectively losing money. Manager selection became very important. And then because there were a lot more mega funds raised, I mean, Partech, for instance, raised $300 million. There's a lot more institutional funds in the ecosystem. So manager selection now became very, very important. Looking at track record, really scrutinizing both on the manager side and on the startup side, what actually makes a good African startup and what kind of fundamentals do they have to have to really go through an institutional due diligence process to be able to get funding. And I think that was synonymous with our earlier discussion about interest rates rising and just people becoming more selective in general. And
I'm just wondering if anybody has done any studies around returns on investments that are gender focused, because we often talk about it and how it's impactful. Women are better capital allocation, efficient allocators of capital, but it's the empirical evidence that kind of supports that sometimes I'm missing, because you feel like you're always trying to prove that this is a better way to go in terms of diversity. But I asked, show me the numbers, right? But maybe it's just something to think about. I don't know if you have any thoughts on that.
So we're not we focus on healthcare and fintech. Now, from our existing portfolio, 50% of the investments that we've made have been into female founders. And I think
that wasn't your primary drive.
That wasn't our primary drive. That was just a byproduct. That happens because mathematically, if you look at it, Africa is the only continent in the world where a woman is more likely to start a business than a man. In Asia, men are more likely to start businesses. In Europe, men are more likely to start businesses. In America, men are more likely to start businesses. In Africa, actually, there are more female entrepreneurs than male entrepreneurs. Women are more likely to start a business. So mathematically, if you think about it from a pure numbers perspective, you should be making more investments in female-founded companies than probably you would elsewhere, just because the sheer likelihood that you're going to come across them. And so we're not aiming to invest in all female businesses. We're a venture capital fund that invests in the best businesses in Africa. And it just so happens that 50% of them have female owners.
So you do healthcare and fintech. Beyond sort of profitability and some of the other standard metrics, if you like, that you look at to assess the viability of investment, are there new types of criteria that are emerging in the current climate that are likely to define the 2025 landscape? And I'd like some thoughts from your perspective.
I think that we're thinking more seriously about exits. So every time we make an investment, we think from the beginning of that investment, where is it going to exit? And as somebody that has had multiple exits now, I've always been quite focused on how is the acquisition or the secondary, who is likely to acquire this, who else can I get on the cap table, so what kind of value add can I add to the company that would make it more attractive to a follow-on investor, a private equity firm, or an acquiring firm, or how can I list this company on a local stock exchange perhaps to get liquidity. So I think that there's been a lot more focus on that, like sort of thinking about that earlier on. And I also think that apart from looking at profitability, we're looking at people are now looking at, what type of business is this? Is this a marketplace? Because marketplaces tend to attract lower valuations than, say, software companies.
When you say a marketplace, sort of what do you mean?
So when you have a pure software business, I'll use the example of the perfect tech business, which is Microsoft. You pay for the same Microsoft every year, and you're paying for the software. Whereas with Uber, you're not paying for Uber software. You're paying for the service that the software can give you. Okay. So pure software companies typically attract higher valuations than marketplaces, for instance. But there's also been big pressure on valuations. I think the valuation is a bit of an art or a science, but I think there's been a shift in the past few years from the arty side to more of the science side, where we're really saying, can we justify those valuations right now? And what happens when you invest in a company at too high a valuation is later down the line, when they don't hit that target, they go through what's called a down round, which is bad for everybody. It's bad for the founder because they own less of their own company, and it's also bad for the investors. So there's been a big focus on valuations and making sure that we're investing sensible valuations that companies can continue to raise, because overly high valuations were seen as good for the ecosystem, but actually we've discovered that they're bad for almost every player in the ecosystem when you invest at inflated valuations.
Ola, I wanted to talk a bit about the Silicon Valley model. We've kind of accepted that we can't be reliant on foreign capital, foreign incubation systems, and all of these fancy Y Combinators. But are there still things we need to be learning from that segment in terms of the models that are evolving in Silicon Valley and elsewhere around the world for venture capital here in Africa?
So I think that Silicon Valley and Africa are inextricably linked, in the fact that even when our companies, we have quite a few seed funds, pre-seed funds, but by the time companies are going to Series A, Series B, we're almost always going to Silicon Valley for funding. And we have a great relationship with the Silicon Valley ecosystem. So I'm predicting that this year is going to be great for Silicon Valley, but by virtue of the fact that it's going to be great for Silicon Valley, it's probably going to be great for the African ecosystem as well, because when Silicon Valley is doing well, we just tend to do well as well. Because there's a lot of links from Stanford University, alumni, from sorts of people that live in San Francisco, Nigerian diaspora, etc. People just end up raising their later rounds, partly from American investors. So I think that there's that relationship there already. In terms of things that we can learn from Silicon Valley, I really think it's around this mindset of massive scale, right? I think that in Nigeria in general, there was a great article in The Economist that said that, Africa has too many small businesses and not enough businesses of scale. And when you look at the Fortune 500, for instance, there's no African company that is amongst the biggest companies in the world. And I said earlier that 50% of American stock market capitalization is venture capital backed. That means that venture capital is a really important asset class.
So these were companies that exited via IPOs or ended up on the stock markets.
Yes, exactly. So the Magnificent Seven were all venture capital-backed companies. And so if we really want the engine, and we spoke about Britain's sad situation where they hadn't embraced innovation quickly, and because of that, the economy seems to be sort of dragging. So really, I think the biggest lesson that we need to learn from Silicon Valley is about building companies of massive scale and thinking about that massive scale from day one. Like I said, Africa has a lot of small businesses, but not enough big businesses.
And
I think a key quote from that Economist article is a lot of businesses in Africa are unemployment in disguise.
But I think I was going to ask about the scalability question. I wonder what the tipping point is and what it would really take to. What are we missing for the scale thing? Is it funding? Is it infrastructure? Why do we have so many small businesses and such a fragmented ecosystem here? Dr. Ola, just a final word, really, in terms of the actual amount of capital we expect to flow. Are we going to see larger size ticket deals this year?
So, from the global perspective, we are definitely, because most of the venture capital money that went into funds went into like the main 10 funds, the tier 1 funds in America. So they're going to have to write larger tickets because it's hard to raise $3 billion and then be giving 100K to people. It's almost impossible. So we're going to see larger tickets globally.
Yeah.
Now, is Africa going to benefit from that? It really depends on the fundamentals of the startups that are presenting themselves for funding.
Thank you. Sorry I had to kind of race through that. Thank you so much, Amaka Obara and Ola Brown, for talking to us about venture capital. Great to be chatting with you. Thank you. Well, that's all we have time for Business Week this week. I'm Rola Keakinwe-Filani. Let's continue the conversation on X and do have a lovely rest of the weekend. See you soon.